Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics. Well, this post covering finance and property news. Another Monday evening, and Edwin is back. Edwin, it feels like yesterday when we're speaking, but boy, a lot has happened over the last few days.
Can the politicians cram any more in a week?
Well, it's not just, of course, politicians, but of course, it's the fallout, the implications, which I've been amazed at just how much has been written and how speculation has been really running hard after, of course, Mr. Trump got, a very significant vote back. And there are, of course, discussions about how it will hit our region. Very much talking about the illegals and a whole bunch of other things too. So the truth is that we probably don't know too much about what is likely to happen, but the speculation is running really hard.
Well, look, Martin, we've been talking about it. We've been skirting around it, and we said, how is it going to affect for tonight's podcast, the Monday night rant? It's all about how will it affect the property arena. I posted some stuff on X with regards to what would happen with a Democratic win or what would happen with a Republican win. So now we've named it. We've got the Trump effect, outside of other markets. I mean, I can only talk about property because everything else is beyond me. But one thing for sure is the Kryptonians are celebrating. That's one thing. Yeah, one thing for sure. But with the Trump effect, there's obviously there's winners. The winners in America were the Republicans by a decisive victory, and it had to be that way. Well, one way or the other, it had to go that way. Otherwise, America would have been on fire right now as we speak. Uh, but in terms of the winners here in Australia, from the property market point of view, the winners of I feel are no matter, as I said in the post, no matter who takes the helm in the US election, the winners will always be it's going to be the property market, and I spell that out in detail. The version of what does it mean? What does the perceived meaning is for our property market should the Republicans win? And it's to do with more of a historical point of view and more of what was happening under his previous administration when he was sitting under his administration as 45, and now what could possibly look like, and more so, it's the perception. It's the emotional perception of what people are going to believe moving forward is going to be, which is going to, the economic future. And because as we were seeing around the traps, there's a lot of people waiting. There were a lot of people, the WeChat chatters in particular, were very vocal about it in the social media platforms, and waiting and seeing what was going to happen. And I believe a lot of other people as well. Now you've got the Kryptonians that have made a lot of money with the Trump effect, and I can extend that to a lot of other people that have got stocks, and the share market certainly gone high for many. So there are a lot of winners there, and how much of that is now going to be translated into the property arena is going to be interesting moving forward. But I spelled out what would happen to the property market, our property market, if there was a Democratic win. People can read that in more detail in my post. We won't labor on that tonight, but which would also be a win for our property market. But more to the point, a Republican win, I feel that the effect, the positive effect that for the people that own property, that are sitting on property, as I discussed before in the previous rants, was going to be immediate, because it's now the people that have been on the sideline waiting, and as I said, with a better economic outlook. And I feel that they're going to jump in. And in some areas, change has been immediate, not in all areas, in some areas. But I guess with talking about the winners, and we also need to say something about the losers, not the Democratic Party, but the losers. Unfortunately, whether it was a Democratic win or a Republican win, the losers are the Aussie families that are not in the property arena because I feel in the Sydney, more to the point in the Sydney region, uh, yeah, perhaps also in the Brisbane region and Perth markets. That one for sure. The yeah the losers are those that aren't in because I feel that it's going to be there's going to be a new breath under the property market there, and we're going to see properties in certain areas reach another high uh, because of the supply. I don't see the numbers in terms of freestanding homes that we would expect, and because of that. It's going to be a quick turnaround with numbers in certain parts in certain markets of Sydney. I really feel that they're going to start climbing and they will be climbing very quickly. In some markets, as I said, we're going to see this change before the end of the year. And in a lot of the markets, this is going to be more evident, in the mid first quarter of 2025.
Yeah, well, it's an interesting take that you have there, Edwin, and I'm fascinated that everyone is sort of stressing about what could happen, right? Because there was this article, for example, Trump presidency could be disaster for Darling Downs. A Trump presidency could delay interest rate relief for Queenslanders under high mortgage stress and hurt agricultural producers exporting to the US, according to Queensland political leaders and experts. So that's just one little take on it. And of course, it's really quite difficult to read. You've got things like this. You know, Trump could mean the tariff clash with Australia. Australian leaders are preparing for tough fights over defence deals and trade wars. AUKUS, of course, is an interesting question. And I know Chalmers is talking about the impact of that today as well. So that'll be quite interesting to see how that plays out. You want it sort of double-barreled? Well, look at this one. Trade wars may force RBA to lift rates. A global trade war triggered by Donald Trump's proposed tariffs would push up the price of goods around the world, putting pressure on the Reserve Bank of Australia to deliver further interest rate increases, potentially wiping $12 billion off mining exports. And in fact, NAB boss Andrew Irvin said that he was worried the trade war would erupt between the US and China under President-elect Trump. So it is fascinating. KPMG did some modelling and it looked pretty negative to what was going on. So all of those things are there in the background. But I want to come back to what you're saying. In particular markets, in particular areas, particularly freestanding homes, you can't go at the general level. You have to go at the specific level. And it's quite clear to me that there is still significant demand in some areas, particularly of Sydney, but other states as well. We're seeing some of that in certain types of property. However, not all property is going to move in the same direction. And I'm still of the view that those with units are going to have quite a different story ahead compared with freestanding homes.
Yeah, more to the point, the newer high-rise developments, that are riddled with many issues. But we start talking in general terms as well, Martin. Look, I didn't get a chance to look at or read through some of the posts that have been put up and articles outside of the mainstream media, because now we've realised that the mainstream media somewhat lag as to what's put on other platforms. Is X the new mainstream, and is a more closer to, not, let's say, not so much the truth, but is it closer to real time? Is better terminology. The main auction results is that's also gone by the wayside. Now we've got square meter research and Tarex and anybody else that wants to jump in at doing a quick analysis of the auction results on the weekend that are on the ground. I mean, I'll put out some from time to time. But so with that, there was some posts that correct me if I'm wrong, but my understanding from what I've just heard generally in passing is that the tariffs aren't going to hit Australia and England, for that matter, as hard as the EU and other countries. So, from a general point of view, I think we may get a pass. Look, the only way that we probably won't get a pass is if Mr. Rudd stays as the Australian ambassador to the US. I mean, then I'm sure Trump would have something to say, and we could get a kick in the pants. Or Chalmers and Albanese will get a kick in the pants. But going back to where what the market that we understand, what we understand. Look, I called around. I didn't get a chance to send you some of the screenshots from the reports. So far, 2 out of 5 main officers that I talked to over the weekends as to catch up on results. 2 out of 5 have seen immediate results. One of which I've sent you. That's in the Northwest region in that post that I sent you. They were asking what the numbers were on the weekend, and that's a WeChat chatter area. That's an area where the chatters were waiting to a certain extent, because this is where they're not buying these properties there in this area in the Northwest region for investment purposes. Predominantly they are homes that they're buying for as principal places of residence, and the reports there. And this is from an office that's got 11 or 12 sales agents and 8 or 9 property managers. So it's not a small office. And this is one of the senior partners there that's getting back to me. Now, having said that, as I said, two out of the 5 came back with positive results. The other 3 said, same old, same old. But when I started looking at the feedback from the others, one of them was from an office in the eastern suburbs, and and we also got to look at the price point and who's buying in those areas. The areas in this particular area, the eastern suburbs, it's not your WeChat chatterer base. It's more your expats returning from abroad with a lot of money, downsizers from beachfront, waterfront properties, downsizing into smaller single level homes. So the Trump effect hasn't really hit them as yet, or hasn't, and perhaps we may see that, as I said, later on in early mid first quarter of 2025, or towards the end. Because what I look at, Martin, when I look at these and I start analyzing the markets and what's happening, a lot of it obviously has got to do with emotion, has got to do with the perceived emotion. And we've got to understand that, as in my game, as a buyer's agent, as a buyer's advocate, as a property consultant, I've got to understand that, and my team has to understand that, that there is a lot of emotion that people are running around with, that are buyers, and they're not necessarily buying on logic or reason. A lot of it is to do with emotion. And that's the unfortunate thing. But also culminating or adding to that is also the supply and demand. And as we go on and drill down, and then we've got type of properties, how well presented they are or they're not. So all these things come into play. But that's what we're seeing at the moment. I feel strongly about that emotion. I'm not saying that that's there's going to be I'm not disregarding the fact that there's a lot of pressure out there, disregarding the fact that there's a lot of mortgage stress out there. But I think this is going to give people that second wind uh, to let's say to push through some of the pain that they've been going through in a lot of the Sydney markets, and we're not going to see the numbers that we are seeing in the Melbourne markets, because it's a let's dump anything we can get there, because it's not just it's also state policies and taxes and everything else that are pushing against property owners and investors there, which we're seeing a huge deluge of property onto the market.
Yeah, well, I made a few shows over the last couple of days, and we might just put those up. So I put one up saying property markets caught in a higher rate trap. And I also mentioned that more first-time buyers are getting help from parents, not just from bank of mum and dad, but also grandparents and siblings as well. Did some analysis on that, which is quite interesting. And in fact, on Tuesday, I'll be running my live show where I'll be looking through the latest financial stress modelling, and people can ask about specific postcodes, because I think granularity is very important. My own view, Edwin, is that there is a bit of a dark shadow hanging over rate cut decisions now, particularly in Australia. And the RBA was already signalling potentially that, with inflation still quite strong, and with some of the other issues that we're seeing, the unemployment rate still relatively low, probably no rate cuts now. It's kicked out to July from the markets from, it was February quite recently. Before that, it was last October, November. So, who knows? But I actually made a show called Albo, It's the Economy, Stupid. And I think it's worth just coming back to fundamentals here, right? Because the lesson of the US is this. It's much more about individuals and their financial positions than it is about the overall economy and, the state of the stock market and those sorts of things, right? So many people in the US were feeling less well off compared with 4 years ago. And of course, Trump pushed that really hard, specifically towards the end of his campaigns, and asked, are you feeling better or worse than 4 years ago? And of course, most people would say, well, we're feeling worse off. So I think the impact on real households and their financial position, and the fact that people are feeling pretty unhappy about things, is pretty relevant. Now, when you actually overlay this particular information, this is the relative gross domestic income, household disposable income per capita in Australia and the US. And you can see that in the US since 2022, well, they've done quite well relative to Australia. But in Australian terms, the gross household disposable income per capita has gone through the floor. In other words, people in real terms are continuing to go backwards. And I think that's a really important sort of observation when it comes to thinking about what may be playing out ahead. So that's a political risk for Albo in terms of what he's thinking about with the election due now by May next year, and now potentially with no rate cuts. So I would expect to see more handouts and other things from the politicians to try and actually build a bit of support for them. But it is very significant. So, for example, this article that came out saying it's more than a headline, Jim, talking about the fact that Chalmers is focusing on the headline inflation numbers rather than the underlying inflation numbers. And Jonathan Kearns, ex-RBA, talked about the fact that most people will appreciate and feel the inflation problem has not passed. There's a degree of skepticism from most people, particularly about what Chalmers is saying. And, the lady is not for turning. Bullock is holding firm. And the headline information here from NAB was that the loan arrears at the NAB are hitting a 4-year high of $10 billion. ANZ's saying the rate cuts will be later and fewer, and maybe no surprise on that. Although, interestingly, when you actually look below the waterline and specifically looking at what ANZ said, they're thinking that maybe the worst of the stress is over and maybe things will be a little easier ahead. So we'll see. So I'm fascinated that NAB says, well, there's a lot of pressure, ANZ saying, mortgage stress is falling. We're actually, over the hump, and maybe it's not going to be so bad ahead. So I think, again, it shows you there's a certain degree of confusion and maybe a little bit of questioning. But I actually think that this is a really interesting chart. This is from Louis Christopher. Did you see this one? This is the Sydney CBD residential property listings have now the highest level since our records began in 2010. Now, I actually think that's quite an interesting and important observation. And I would highlight that the listings are rising. So there's more new listings coming on. But I think it's really important to also understand that the listings that have been around for a bit, over 180 days and 90 to 180 days, are also on the rise too. So it is interesting to try and read into this the right signals and the wrong signals. And, I don't know, it is quite complex. And I think it comes back to the fact that you have to look really locally, because I don't think you can talk at the aggregate level. But I thought Louis' data was quite interesting.
Yeah, look, again, you're not going to find many freestanding homes in the CBD, right?
Yeah.
So a lot of it's got to do with apartments, and a lot of it's got to do with older buildings there that demanding huge amounts of levies and special levies in order to have them rectified. Yeah, there's we know of many buildings there that the apartments are so dilapidated that it costs you more to renovate, and the cost to renovate those apartments are horrendous. It's if you, let's say, on average you could do a bathroom renovation in a high-rise apartment. I'm talking averages just off the cuff. For $25,000 in the CBD, more than likely cost you $65,000, and another $10,000 in parking fines and all sorts of other tickets, because your trades and everybody else is going to get booked. That's the sort of shit that goes on. So so you've got to, as we say, you've got to look granular. But see, this is the thing, Martin. You and I can talk about the logic. You and I can talk about the reasons. You and I can talk about numbers and facts and figures. But we've also got to, unfortunately, a lot of the tide that moves forward and that lifts a lot of the property markets in Sydney. It's not on logic. It's not on reason, and it's not on on numbers and facts. It's emotion. And emotion, and how much the banks will carry. Look, yes, as I said earlier, we do understand, and I can see that there's a lot of mortgage stress, but this has given a lot of mortgage holders that are under stress, has given them that hope for perhaps another 2, 3, 4 years to let's see what happens, and then we're not going to see the numbers that a lot of people have been expected. We're expecting. Why? Because you've also got to look at what does it translate to? What's happened? That motivation is. I'm talking to some young people, my children's friends and relatives and nephews and nieces and everybody else, and all of a sudden they've got this kick about them now about Uncle Edwin, can you help me look for a commercial property because I want to open up a cafe. What changed your mind? Oh, we're talking amongst our friends and we think it's a good thing now because there's a little bit of buzz and we can start something. So you've got this sort of emotion coming back in. So you think, okay, well, if I'm not earning enough in my primary job, then I'll also get a part-time job. So then you've got this kick because of, as I call it, for lack of a better word, term, call it the Trump effect. It hasn't just happened, but then again, it's wait and see to moving forward. I know some operators of heavy machinery that they're in the construction industry. They're feeling positive post the election and post what happened. they're feeling positive. It's you could say they're greasing the chains, doing an oil and grease change of the heavy machinery equipment because they feel that in a lot of areas the machinery is going to be on high demand again. So this is so when you've got this sort of this undercurrent and you've got banks with a more positive approach of the future as well. They're also going to be a little bit more lenient to either drop rates or forgive mortgage holders in terms of it's not forgiveness, it's really stretching the loan repayments for for another 5 or 10 years at the end. But hey, this is the Trump effect. This is the positive outlook. And unfortunately, in many parts and in many markets of Sydney, I really don't see that now translating into what many were hoping would translate into a lot more properties on market. And I think, and I believe what is on market is going to be absorbed fairly quickly and rapidly in many parts. And at the end of the day, Martin, when you look at the Sydney region, yes, we are tracking a lot higher than we were in 2023, but we're on par with 2022. We're still very low.
Yeah, absolutely. And of course, it goes back to what property is available, what type of property is available, and very specifically in particular locations, whether there is any property at all of a particular type that might be available. Again, I was having a one-to-one conversation the other day with somebody who wants to downsize, but wants to stay in the area. And this is an inner city suburban suburb. And, they've got a reasonably expensive property there to sell, and it's going to sell quite quickly. But they can't find anything at all of quality in or around or even within 3 or 4 Ks of where they're currently living. And that's creating huge pressure for them because they really don't want this very large property. It's got 6 bedrooms and all the sort of the land and the pool and everything. What they want is something a little bit smaller, a little bit more manageable, but they want to stay in the immediate area. And they just can't find anything. They don't want to be forced into apartment living. And they've looked at a few apartments, even relatively expensive apartments. And while superficially the quality might look okay, they soon heard the noise from above and below, and then looked at things like the strata fees and the increases in strata fees in recent years. So they do not want to move into apartment land, which then says, well, okay, so I'm looking for a smaller standalone property in the same region, and there's almost nothing. Partly because, of course, a lot of the property that comes up immediately gets snapped up and then gets subdivided. So it's a really interesting story here. And again, I come back to the point that unless you look granularly at what's going on in those local markets, you're not going to actually get a good read on what's really going on. And by the way, the latest data on home prices shows that at the lower end of the market, prices are still moving up relatively smartly. It's the top end where, in fact, prices are coming back down. So once again, you can't aggregate the data and say, well, Sydney prices drop very slightly. No, you've got to understand that there are some going up, some going down. So I'm afraid the story is you have to really understand what's going on. And I guess on that front, Edwin, if you look at Melbourne, Melbourne's another fascinating example of you need to understand what is going on the ground there to really decode Melbourne. And this post that you've shared, thousands of Victorians refusing to pay spiralling land tax bills. So this is actually a very significant set of developments, right? So I think that you've got to look at what's going on, not only with property itself, but also with the legislative frameworks and who's doing what from a political perspective. And I think Victoria's a bit of a case study.
Yeah, I mean, we can explore this a little bit, Martin, and try to note out what does it mean? What does a land sale off? Because eventually, those that can't pay the land taxes, eventually the properties will go under the hammer. But what does it mean? What does it mean to property values, and then who's going to be buying them, and if this some of the land tax that have crept up by 120, 140, 200 and something percent for some commercial, industrial, uh, properties, they get passed on to the tenants, and because they pay those in the outgoing. So that's part of the the tenancy. So you can't be so your land tax component goes from 120,000 per annum to 360. How do you pass on that much onto your tenant? Your tenant's going to pick up stumps and move away, which is what we are now seeing. A lot of small manufacturing plants or industrial plants looking interstate in order to reset. And this is what I said at the beginning of the year was watch this space and you wait and see what's going to happen around your South Penrith region. Those areas there in the old commercial areas there, the prices, the per square meter are just going to go through the roof, and that is what I'm hearing now. And we spoke about this closer to the beginning of the year. So that's what happened. So what is going to happen? Obviously, the lands that are going to have the greater potential, that the people that haven't paid the taxes for over land taxes for over 12 months, they get closer to start getting the government getting judgment through the courts, and then going under the hammer. Most of these are going to be commercial. Most of these are going to be industrial lands, and it'll be prime lands that to be developed in the future. The question is, Martin, who's got the cojones to buy and build here in Australia? And I can, very few people will have that, but I feel it's going to be bought by, if we go that far, if it's allowed to go that far, it's going to go and be bought by overseas interests, like your Vanguards, your BlackRocks, your, all these, big companies. And as I put in the post, as I elaborated on the post there, and preceding posts from that, is you can expect them that later on, once the land's taken away from the people, then I mean, this is my conspiracy hat on now. Then you've got then all of a sudden, with the swing of a magic wand, the those policies will change again, and then you've got overseas corporations are owning a lot of the land. So, but when you look at that's from the commercial and the industrial side of things, right? Which is, as I said, this is where if it's going to go that travel quick, it's going to go down those parts first. In terms of residential, look at what the taxes are doing to the residential landholders, the investors. They're sitting on. You can get somewhat reprieve. I mean, if no matter who's chasing you, if a creditor's chasing you, as long as you've got things on tow, particularly if it's a bank or somebody that's got a capable interest over your property, or somebody that's forcing you to liquidate because of debt. As long as you've got proceedings on foot to mitigate um, uh, that that debt, you're going to be left alone. And and this is what a lot of people have done. They've put the properties on the market for sale, the residential property. But look at what's happening there. So we're seeing but who's buying? There's very little activity in comparison to other regions, because there is a pile week on week of more numbers coming onto the sales ledger, and again, what's being sold. So it's an interesting. It will be interesting to see how this plays out moving forward. But as I said, with my conspiracy hat on, there's a lot more. There's a lot more going on, Martin. There's a lot more going on. Look, my call on this, Martin, is the rest of the states. We should just put our voices together and let Victoria secede. I mean, WA wanted to secede from the Commonwealth many decades ago. Let's let them go. Let's let them go. Let them all wear red t-shirts and whatever they want to wear, and just let them go.
Well, I've got the theory that the right thing to do would be to have the Victorian dollar and the New South Wales dollar and the Western Australian dollar and have an exchange rate differential between each state, right? That would actually solve a lot of issues. It would solve some of the GST issues. It would solve some of the problem with money flows between the states and all those things. So that's my out of the box, left of field idea for solving Australia's economic problems. Well, they can't solve the gas problem properly, but maybe this is another way of doing it. Now, let's just move the conversation.
Crypto coin market. Well,
yeah.
This is where you need to talk to the Kryptonians, the ones that come on your show and the ones that you talk to and our followers. I mean, this is it. This is prime. Start like the Victorian crypto coin, the New South Wales crypto coin, call it the Waratah coin, the whatever coin they have there. And that's it. It's all about crypto, right? It's all about crypto moving forward.
Well, that's an interesting idea, isn't it? Well, central bank digital currency on one side of the equation and maybe state-based crypto on the other side. Let's move the conversation forward because here's an interesting question. Okay, if you get improvements, if your neighbour does some improvement, should you pay? And this was a really interesting exchange. And of course, it's contextualized by Albo buying a property up the coast and then, already signing off $100 million for road improvements. So all the properties are going to go up. We the taxpayers, are basically contributing to that. But you found another example, I think, quoting Tarek, which is really quite fascinating, right? Where Aussie property owner wants the neighbours to help pay for landscaping their front yard because it will apparently increase the value of their properties.
Well, look, first impressions count, and fair's fair, bro. First impressions count, and if you're going to sell your house, look, I know of real estate agents that have actually, not only assisted with mowing and cleaning, tidying up the properties of their vendors in order to prepare it to go to market, which is something that you do as much as you can and contribute as much as you can to have skin in the game and make sure that you achieve the best price for your client. But not only have they done that, but they've also mowed the lawns from adjoining neighbours in order to have that good impression. So in this case, I read through that. It was rather an interesting post that Tarek put up from an Australian Finance Post, and you really got to ask yourself the question: why not? Right now, I mean, Albo's just taken it to another level. As we said earlier, he bought a home for $4.3 million up in the Central Coast, and then Copacabana or something, and then the taxpayers are contributing 100 million to upgrade the road. So hey, if Alba can get everybody else to pay for an upgrade and the value of the home to go up, I mean, why not? I don't believe that this person that's quoted in that in that post that Tarek put up, I don't believe is asking for much. I mean, what's a bit of landscaping to a front yard? 10 grand between the street. Yeah, it could be $500 a pop, or it could be $1,000 a pop. But if it's going to increase the value of your property, I mean, that's why not? It is an interesting question. It could go either way. So but it takes you to another point, Martin. And that is what people should be looking out for when they're buying into a neighborhood. It's not only the streetscape. When they're buying into a neighborhood, into freestanding homes or townhouses or villas, you look at the community. You look at who lives around. If it's a strata complex, you look at your common areas. You look at those in the complex. If it's a strata complex, or if it's even a gated community, you want to do all these checks and balances before you buy. And so it really So yeah, it's one of those questions. I mean, what are your thoughts on that? Should if you're if you've got a if you've got a hoarder, if you've got somebody that's got, let's say, yeah, five six bodies or chassis and uh, bodies of rusted old cars in the front yard, and you were going to sell your place, um, uh, what would you do, Martin? What would you do to, would you knock on the door and see how you could be of help? Could you, what would you do? That's it. Yeah.
Well, I think there's a couple of interesting observations there, Edwin. The first is that when you're doing your due diligence ahead of a property purchase, right, you look at the property, you get a structural survey, but you also should absolutely be a bit nosy and basically look over the fence and see what's going on, you know, to the side of you and to the back of you. Because if you do have a neighbour that's, frankly hoarding, and you've got, half broken cars in the front yard or the backyard, that is going to have a negative impact on the prospective value of the property. It's also, I think, one of the things I always say to people is just have a look on Google. You know, you can get the top-down view. You can look at the street view, but you can also look at the map view and drill down. And quite often that will show you some quite interesting things too. And I have had conversations with a few people that filed my one-on-one where they didn't do that. And they discovered some really weird goings on next door. Another part of that is don't just turn up on a Sunday afternoon and walk around the neighborhood then, but walk around the neighborhood during the week and in the evenings as well, and just understand what goes on at other times of the day. I remember talking to somebody who actually bought a property quite close but not on a main road, but they didn't realize that there was actually a dry cleaners on the main road, and at the back of the shop, which was effectively abutting onto their property, they actually had a machine that turned on at 8 a.m. and ran all the way through the day and didn't turn off until 6 p.m., right? Monday through to Saturday. And guess what day all the viewings were set for? Sunday.
Sunday.
Yeah. So there's very important. So you need to do your checks and balances, not just when you're being shown the property, but other times too, and be a bit nosy, because you can have significant detrimental impacts on the value of a property because of what's going on in the neighborhood. And I guess the other point is that if the neighborhood looks a bit shoddy, you've got graffiti on the walls and poorly laid out divides down the road and that sorts of things, it all adds or detracts from the first impression, because as you say, the first impression for many people will really set the tenor in terms of how they think about the property.
Yeah, look, then obviously if you're on the other side where most of our clients are, that is on buying, then you got to make those decisions. Do you buy more than likely at a cheaper price point anyway? If you're sitting next to a hoarder, do you have the tenacity, the patience to try and outlive them? Outlive the hoarder, and you got to find how old they are and work it out. So when we were looking for a property for my son, we saw a property and it had a young man been living in there. Had been living there for something like 14, 15 years, and he was a bit of a mechanic and a car buff, right? So the structural integrity of the old cottage was, it was solid, hardwood. It was solid. Nothing. I mean, it was dated. It was built in the 50s, late 40s, early 50s. But it was solid cottage, a nice block of land, nice parcel of land, but it had five, six car bodies all around the house. when I inspected the property with the agent, got me in there before the open house inspections. When he told me that this was coming up, I actually saw it, a couple of weeks beforehand. Um, there was an engine block on the on in the lounge room. Literally, there was an engine block that he had been working on in the in the lounge room. He had carburetor parts in the kitchen sink. There was some other parts in the bathtub that he'd been washing, and fenders and all sorts of panels in the spare room. It was a two-bedroom cottage, and from a buying point of view, from my point of view, it took me a little bit to convince my son, obviously. But I said, listen, you got to look beyond all this stuff, and you could say we got it for less than at the time we got it for less than land value because I made the point that it was going to cost a fortune to clear all this and to decontaminate the land. I mean, I paid very close attention and I spoke to the young fellow, and he was untidy, but he was prudent in the way that he discarded the old the oils and the old the caustic liquids the brake fluids and everything else from the vehicle. So we had a bit of a chat again. We went there outside of the normal hours and just to catch up with the young man there. And look, but they're the decisions that you have to make, and you take those risks. After the purchase of the property and cleaning up the front yard and the adjoining side yard, because it sits on a corner to an adjoining block. Then the agent, once we cleaned it up, the agent sold the block of land, vacant block of land, smaller parcel of land for close to $100,000 more than what I bought my son's block with the cottage on there. And my intrinsic value of the cottage at that time was 150,000, and now he's done very well. He's had it for almost 3 years now, or just a little bit over 3 years, and he's had almost double the equity that he's almost doubled the equity that it was valued at the time. So, but these are decisions that you have to make. So there's both sides of the fence, both sides of the coin. When you're looking at these sort of old structures, but going back to Tarek's post, it is an interesting one. But it depends whether you're a buyer and depends whether you're a seller.
Yeah, well, that's what the market is about, isn't it? Bringing buyers and sellers together, hopefully well informed, with all the information to make the right decision about what the price point actually is, which is, of course, is what the market is all about. Now, talking about what the market is all about, of course, where you get your information is actually quite important. And one of the things that you've been talking about is we should be a little bit careful about what property sites, websites in particular, that you actually get your information from, and who do you trust, because it may not be what you think it is.
Yeah, well, so we're checking in on previous posts and previous commentary, right? Because there's no point just talking about it. And I said at the time when we spoke about the 8A Regal Avenue at Kings Langley, when that post came up and there was a big song and dance about it, and negative. Oh, look, I understand negative equity, but we really got to be careful as to where we get the information from, like you said. And I said, because I know the agent, I know the listing, I know the house, I know about the owners, who owns it, and I know knew their expectations. And I said anybody that buys the property will be lucky to buy the property for less than I think at the time I said 1,275. So here we go. It sold recently, and it actually sold for 1,360,000. But the website that the individual posted this on the website was I believe from memory was under $1 million. So, and this is how far apart some of these, or how much some of these websites lag, and this is just got to be careful as to what you look at, where you look at, and not only look at one source, but look at multiple sources. Get the information from multiple sources, multiple platforms, And as I always say, there's no harm in talking to agents. There are ways to extract information from agents. I'm talking to people now that follow us. I mean, I do this all the time. My team does it all the time, and that's how we come to know him. And I've got the relationship with a lot of agents, and so in my team have a relationship with agents, so we get somewhat inside information, you could call it, to get the inside track on what's a what we would chase and what we won't chase, and so on. But yeah, so just got to be careful. The next post is I checked in on Albo's property, and it's still there, and there's still Albo's still looking at price point above 1.8 million, of touching base with the agent. He's still up there, and they're not budging. And who knows, Martin? Maybe next week it'll be gone. Maybe the Trump effect will hit that Dulwich Hill, and it'll go, and they might get. He might surprise us all and get above the. There'll be a lot of buyers coming in. Who knows? I doubt it, but yeah, it's still there. And last but not least is the one that we've been looking at, and it's got to the point where even we looked at the anomalies of it's for me it's just I haven't seen a co-listing for decades, shared listings between agencies that compete with one another in an area. I haven't seen this for as I said, for decades, and now this has come up in the eastern suburbs. It's becoming a trend. There's about 5 or 6 now that I've been made aware of, but this one, the point with this one was not only that that's a co-listing, a shared listing, but also that it's both both agencies are somewhat you could say, I could allege that they are misleading and doing a bit of playing a bit of shenanigans and perhaps baiting buyers to the listing, because we know what the owner wants. We know that the owner wants 5.5, and they're supposed to collude at guiding at 4.8, but hey, one decided to go even a little bit lower, Martin, and he's gone all the way to 4.6 million. So he's 200 below. And I replied to the other agent, because I went and inspected the property, and I said, hey, we're going to continue looking at the property with the other agent, because I made an inquiry on email, and he replied, and I said to this agent, look, I think, look, just to put the cat amongst the pigeons, right? I just said, I think we'll look, because my colleague inspected the property, and lo and behold, they're guiding $200,000 less than what you are. So we feel we've got a better chance at getting it for our clients at a cheaper price. I would have loved to have been the fly on the wall when that conversation went down with the vendor.
Oh, that's just being naughty, Edwin. Very, very naughty. But look,
I'm allowed to be.
yeah, absolutely. But the general point is well made, that the information on websites may not be up to date. It may well be there with certain information which is there for a purpose rather than actually what you think it's there for. And we've spoken very often about the underquoting, and we've talked about the bait advertising. So yeah, just be careful. I think you're right about checking multiple sources. That's always a good thing to do. And also check the official data sources. In New South Wales, of course, you've got the Value General site, which you can actually get quite a lot of good information about comparable sales. And I have seen a few times where agents have been selective on the recent sales that they actually go with to try and convince a particular vendor or a particular prospective purchaser about what is actually going on. And so it is important that you actually do a little bit of your own due diligence there and look at all the recent sales, not just the ones that agents may selectively be pulling from to try and bolster their particular position with regard to what they think the story is. So again, do your due diligence, use multiple sources, and the source of truth is the Valuer General rather than these real estate property portals.
Yeah, look, and next week I'll be making some inquiries with some legal eagles, and next week I'm going to be talking about one of the main things that is starting to filter through the real estate industry to make it harder for for um, for the general public to have price disclosure,
Yeah.
which is rather alarming. So I'm going to talk about it more specifically and spend a lot more time on that. I'll send you the video, Martin. That way you could see what we can share, what we can't share. Obviously, we got to do it in snippets because the YouTube won't allow us to share so much, so much. But I'll share with that. Remind me during the week to send it to you early so you can have a look through it. I'm waiting on some feedback from some lawyers. And yeah, it's rather interesting the way that the industry wants to move, which is totally contrary to where fair trading wants the industry to be at.
Yeah, lack of transparency is getting worse and worse. More information is being withheld. If you actually look at a lot of listings, it'll say price on application or something like that. Recent sales are not actually being updated, and quite often the information on these property portals is now, well, next to useless. In fact, I would say it's worse than useless because it's actually, well, deceiving potentially what is really going on. But we can go direct to the source and look at the latest information. So let's just look at the domain properties for sale in Sydney on the 4th of November, 21,745. If we jump forward to the following week, 21,645. So, the trends continue. And as the graphs show here, property listings compared with 2023 are still quite a lot higher, although maybe coming back just slightly. But I think the point that you made earlier on, Edwin, is just worth re-emphasizing. These are still not massive numbers of lists.
No, and more to the point, it's as many have spoken about it now. They've cottoned on that the people that want to get into principal places of residence, they're not really that interested in high-rise developments. They want to buy freestanding homes or, worst case scenario, in a small strata complex, be it a villa, townhouse, or a three-story walk-up. The old three-story walk-ups that were built in the 60s, 70s, and early 80s. So yeah, because of the issues, and as forgot is it Lee Van Olsen? He spoke about the second wave of major issues that are going to come. There'll be a second wave, and there'll be a third, and there'll be the tsunami, and there'll be a tidal wave, and there'll be because we just can't get it together. We just can't pull it together. All I know is that the costs to build. I've been speaking about on the show that the costs have now hit something like 580,000 per dog box. You can add another 20,000 to that now, talking to some of the developers, and they're talking it's costing them an extra 20,000 per lot to obtain the actual reports that the building commissioner wants in the to be part of new construction. But you can have all the reports in the world. You can, as I say, everything looks great on A1 size paper, on drawings, on plans, on brochures. It looks great on the big screen when you look at artists' impressions of what building. But another thing is building the damn things. So you can have all these extra reports and extra costs. But all it is just adding on and piling on. Hence the reason why most of the builders don't want to build high rise, and what's out there, many know, and many are staying away from anything that's that's been built in the last 15, 20 years.
Spot on. Yeah, I'm afraid it's going to continue to get worse. And again, in my one-to-one conversations, I'm getting some horrendous stories of people who bought high rise off the plan. And, a few years later, things are just deteriorating so rapidly. The strata fees are continuing to rise through the roof. There are conflicts with the builder as to who's responsible for some of the ongoing maintenance and whether it was actually a fault created as part of the building process or was it actually bad maintenance past the finalization of construction. And so a lot of stuff gets caught between these two, big parties. In the meantime, the poor old vendor is struggling to know what to do as the value of the place continues to fall because the amount of stuff that needs to get fixed just continues to rise. So it's a never-ending story, unfortunately. Let's look at Melbourne. So Melbourne on the 4th, 30,836. A week later, on the 11th, 31,164. So once again, we are continuing to see those continued climbs. Again, houses are leading the way, plus land. It's still there. It's still going on the same trend. So no change there. If we look at Brisbane, just by comparison, on the 4th, 4,260. On the 11th, 4,292. So a small rise. And looking at the auctions, there was a bit of a higher listing rate. Of course, we had the horse race last week. Clearance rates still knocking around similar rates. And there was a bit of press coverage that suggested that might be better than last week. But Edwin, to me, the real story here about auction rates is still many people are actually not ultimately taking their property to auction. What they're doing is pulling it beforehand and then listing it privately.
Yeah, private treaty and people that are thinking of selling. Again, depending on the property, depending on your timing, depending on in most cases, not in all cases, but in most cases, it's where they're achieving the better results, because this whole thing about timing in markets like we are in now, it's all about spending the time, making the agents spend the time for what they're asking. 1.5%, as I said, is the average commission in the Sydney region, and not that far away in Melbourne or the Brisbane region either. Obviously, you can get you can get things done for a lot less, depending on the demand in the area and the price point of the property, and get a lot of other incentives thrown in, marketing and everything else. There are agents at the moment in parts of the eastern suburbs that will carry the listings. That will contribute. That will contribute 100% of the marketing and staging, which it equates to close to $12,000 in those parts, because domain and real estate for the premier listing, that they charge upwards of $3,000 for the month, for the 30 days. So there's 6,000 across both, and then you've got staging on average 6,000 is your $12,000. So agents will stump that in order to get the listing. But when you look at the price point of the property, upwards of 4 million, 5 million, 6 million, 7, 8, and all, it's a small. It's a loss leader in order to get the listing and get the sale on the other side. But you've also got to keep it, because you don't want to lose that listing after you've spent all that money into it. So that's the market trend, and we're going to see. And then when you got auctions, obviously there's a lot more the other fees that they get thrown in, auctioneers' fees, and then they'll for whatever reason they'll tack on a few more fees that allegedly they spent because it's an auction campaign. So and this is where people have got to be prudent, have got to be wise as to make them. And if you are going to go to auction, well, then obviously make sure they work for it. Make sure they work for it, and and none of these. I've heard so much. Remember my mate that got told that got told the story that he was going to get $2.1 million. Oh, yeah, mate, every day of the week we'll get you $2.1 million. Oh, 2 million to 2.1. That's what we do, mate. That's it. Well, he fell for it. He sold last week. He sold last week, Martin, and lo and behold, he sold for what I told him that his house was worth, 1,850,000. That's what it was worth. And what did the agent do for that? He just spent most of the time telling my mate, giving them all the reasons why he wasn't no longer worth 2 million or 2.1 million because of all sorts of reasons, and the market changed so much according to him in 3 weeks. Said, mate, you were sold a dream, and they delivered the lemon in terms of the campaign. You could have got a bit more, but it is what it is. That is the price point. You could have got a bit more if you did what I told you to do, but live with it. You went through that pain, but I guess he felt more hurt, not because of because he got sold a dream. He got sold that dream, and that's what's happening out there. Agents are selling that dream, only to be crunched down within the first 21 days before, the week before the auction.
Yeah, what's happening, I'm afraid, again and again and again. And people are ending up shaking their heads and thinking, well, how did that turn out like that? Well, you were sold a lie on day one, which you actually choose to believe because, of course, you always think that you're worth more than perhaps you know.
Of course.
Yeah, that's natural. But you need to understand where the market is and where the market was, and no, the market doesn't dramatically pivot in 3 weeks. So if there's a significant, 5 or 10% move over 3 weeks, you know that it was mispriced on day one. Let's just quickly look at the rents in Sydney. So on the 4th, 12,331. A week later, 13,183, so a small rise. And in Melbourne on the 4th, 11,635. A week later, 12,149. And we can see there the listings are rising slightly, and that is consistent with what we're seeing, with a little bit of pressure coming off, but the rate at which rents are rising might be easing slightly in some areas, but they're still dramatically higher than they were a year ago or 2 years ago. So the pressure on households continue. Well, as we come to the end of the show, Edwin, there's just time for you to, well, it's a tip of the week, but it's an update from last week's tip of the week, where we talked about making sure you understood particularly things like extensions and those sorts of things. But you talk about timely, hey?
Well, yeah, the day after I got invited to go and look at a property for one of the agencies that I've done a bit of work with, and that have helped a couple of my vendors in the past in helping them to sell. And they said, look, can you go and we've sold the house, it's settled now, and they can't seem to find good tradespeople. Can you go and have a look and see where your teams can help them out? So I said, yeah, look, let me go and have a look. It was close by to where we're doing a bit of work for another client anyway. So it's only 5 minutes away. So got in the car, went and had a look, and lo and behold, exactly what we said that people should be looking at. I managed to crawl under in the subfloor area, and it was the piers were very high, so I crawled in there comfortably, and started seeing, as soon as I entered, I started seeing the old mud tracks from the termites. And I thought, gee, that was interesting. The reason why I went underneath it was to see, because they needed some electrical work done. That was the first thing that they wanted done, is they wanted extra points. And I talked to my electrician, and he said, mate, I can't get there. We're caught up in another job. Can you have a look for me and point out what they want? Just make a note, and then I'll go and see them personally in a couple of days' time. So I said, yeah, why not? Let me go and have a look. So they wanted to add, close to 12, 13 new GPOs, power outlets, to the the sunroom that was going to be going to turn into a workspace. That we're going to have something like 8 to 12 people come in and work, because they're working from home on some projects, and sometimes he has the whole team there. So in other words, the fuse box was going to be really overloaded. So I said, look, let's have a look at your the main switchboard. Martin, you'd be surprised. It was it was, you wouldn't be surprised. Nothing had changed since the property was built in the early 50s, or probably in the late 40s, early 50s. It had 5 or 6 ceramic fuses, no safety switches. I thought the electrical circuit was overloaded anyway because they had air conditioning. Yeah, the previous owner had air conditioning units, fans, and all sorts of shit in there. So it didn't look that healthy. And yet they were going to add more points, add this, add that. And I said, look, before you do anything, let the electrician come around and have a look. But then they said, but what we really also want to do is, convert the rear sunroom, what they thought was a sunroom, an enclosure there that looked like it was part of the house. But I said, look, this is nothing more than a very large veranda that they've just enclosed, and I would be doubtful if it was council approved, because your bow rating here would be close to 40, if not higher. So, which is your bushfire attack level, and in this case, they're right on the border of the of a reserve. So the backyard literally hits the reserve. So they bought it without doing all these checks and balances, and I said, look, hey, this is just on face value. I'm giving it to you now. So you'd really want to, double check a lot of these things, or we could do if I'm going to help you out and my tradespeople are going to help you out, then we're going to obviously make sure that everything is done to spec because of where you're located, where the house is positioned. And then they said, oh, yeah, but can you put us in touch with the builder that will help us build a granny flat? And I said, granny flat? I said, you'd be lucky to have the enclosure of your balcony approved because the glass isn't fire rated. It's not up to spec. Just on again on face value, I said, look, this is about 40 for sure. And none of this is, the glazing isn't compliant. And they were gobsmacked. So they were literally, they didn't do the checks and balances. They did say that the building report that was supplied to them they made a mention of it was old termite damage, but the termites had since been eradicated, or they've moved on to elsewhere. But I said to them, yeah, that may be the case. But, that's right. They said, oh, by the way, can you have a look at the skirting in a couple of the bedrooms? And there appears to have got some moisture damage. And you just put two and two together. I said, guys, this is moisture damage, but it's not so much moisture damage from what you think from coming from the ceiling through the wall. It's moisture because the termites have gone through here, eaten through, and the dampness and the mold that you see coming out is because of the old termite mud that's sitting behind the gyprock in between the walls, and this is why you've got this. And then I bashed on the wall, and you could hear it all crumbling down. So I said, once you start exploring, you don't know how much of the actual framework the termites, those little bastards, got a hold of. But one thing for sure, that you have to change the skirting boards because there's nothing there. It's just the veneer that got left behind. Yeah, it's crazy. So that's just the day after we spoke about, but our viewers and our followers know a lot better, which is comforting for me.
Yeah, so you need to inform your solicitor and conveyancer, particularly if you see any extensions and those sorts of things. Make sure that you actually do understand. And just because the agent said that the previous owner bought it like this, that doesn't make it right, does it?
No, in this case, it wasn't so much that the previous owner bought it like this. The previous owner was the one that put enclosed the sunroom, but the previous owner said, "Oh yeah, the termite, it's been dealt with." As I said, that may have dealt with it. That may be the case, and you've got termite traps all around the house. That's maybe kosher, but it doesn't mean that there's no work being done to the affected walls and where you've got the mold coming through. So more than likely that the framework in there, could potentially, I'm not saying it is, unless you really do some, a little bit more exploring and do, pull pull some of the gyprock out, cut through it, and then have a good look. You're not going to see how far the frame has been affected. But for sure, if you got your skirting boards gone, there's you know you got to look a little bit further, and especially if you got old mold coming through the walls. So those little bastards have gone a lot further than what the report said it had. So yeah, things like that. They're little telltale signs. So unfortunately, what they thought was going to be potentially a $20,000-$30,000 doer upper to not only live there but to then convert into a working environment. It's going to cost them $30,000-$40,000 in upgrading the electrical circuit to start off with.
Yeah, well, object lesson there. Once again, do your due diligence on the way in, not retrospectively. Edwin, thank you very much. Another very informative chat with you as always. We'll do, of course, the same again next week. I will just remind everybody once again that tomorrow I'll be running my latest live stream, and that'll be around our financial stress modeling and what it all means. So feel free to join us for that, and you can ask on the live show for a particular postcode analysis. So that'll be fun. And I'll look forward to catching up with you again next week, Edwin, with hopefully this week will be a little quieter on the international political and economic front, but who knows? But I reckon there's still plenty to talk about on the property front next week. So I'll look forward to seeing you then.
Yeah, looking forward to catching up with you then too, Martin. Take care. Look after yourself.
Take care. Bye-bye.